Thank you very much for spending part of your day here with us on the Market Day Report on RFDTV and Rural Radio 147 on Sirius XM and the Sirius XM app. I'm John Jenkinson, and the grains were a little bit weaker last night on overnight trading. Going into the day trade, well, let's take a look at some of these numbers. We start with the corn market here, and about almost midway through today's session, we find that we're just slightly lower. December corn down a half, 350 3/4. July corn down 1 at 380. Let's stop right there and welcome in Rich Nelson with Allendale Incorporated. Hello again, Rich. All right, here this corn market is just a little bit weaker, but it hasn't completely gone a whole penny lower yet. And many in the trade were saying we really need to see some follow through here today after yesterday's rally.
I think that's the case. You know, we could certainly argue the idea that maybe we need to come off those previous lows, that 342 to 344 range is a good point to find support from. But like you mentioned, we can't find any news needed to get us solidly past this 350, 351 range. So certainly good news for that rebound, but yet not enough to say that the bulls are in control here.
Well, I agree with you completely here about that 350 range, because many in the trade also say it's been very difficult to get very far away from 350, that it's going to take something big. When we talk about something big, is that something like South American weather or maybe the end of harvest here in the United States?
You know, I think actually I'm going to throw in one extra issue with that is I certainly agree that the South American weather issue will be an issue for us probably as we get into December or maybe in the later November time frame. One thing we've got to look at from my standpoint is this idea about demand. You know, and we know that we've come across with these starting viewpoints on demand each year a little low, and they increase as the year goes on. I wonder if that issue might be seen again, especially for us on these feed grains with such a cheap price being offered for us right now.
Speaking of demand, soybean demand has been very robust up to this point, although some say it could be better. When you look at the soybean market today, we're down 5 cents on the November at 9.75 3/4, and July soybeans down 4 3/4 at 10.14. So is this a demand story or a supply story?
I would say for us, you know, for right now, this is probably a supply story, lower trade here based on this very aggressive harvest we did last week. 21% of the crop done in just 1 week there. For that particular week, that was the most aggressive pace since 2002. So very aggressive bean harvest pace, I think, is one issue. As of yet, we've heard a lot of talk about these lower yields coming for soybeans. As of yet, we really haven't seen them show up on a nationwide basis just yet there.
Do you think we have a weather threat looming with this soybean market and soybean harvest then here over the next week or so?
You know, it might be an issue, especially we have more forecasters calling for this freezing temperature issue lined up for many of the areas in the north, or maybe some snow or freezing rain. Maybe those issues will be something to discuss here in the coming days. As of yet, looks like the market's not wanting to get too excited about it.
All right, let's look at the wheat market then today and see if there's anything exciting to get all wound up about over here. Right now, December Chicago wheat down 3/4, 436. July wheat down 1 1/4, 480 1/4. We check out July Kansas City wheat contract. It's down 1 at 482 1/2. When we go to Minneapolis, and the wheat market over here in the Minneapolis wheat market's just a little bit higher. So what are your thoughts about the wheat market today?
You know, as far as wheat, obviously we're at a cheap price, and we can make all the large supply arguments we want, which are all very valid. I think one thing of note, which is interesting, is a few buyers have been showing up these past few weeks, which were not expected. You know, a lot of these large buyers, these Algeria tenders, for instance, which has just been put up again here overnight, I think these type of issues are saying that from a buyer standpoint, they realize that these are great prices and they're going to be taking advantage of them while they are offered right now.
All right, and yesterday we had a big day in the cotton market with a little bit of weather concern over there. Right now, December cotton up 20 at 69.92. But don't go anywhere. Rich Nelson will join us again on the other side of the break. We'll talk about the livestock trade coming up next. It's the Market Day Report. What's going on with the live and the feeder cattle trade? Let's take a look here at these numbers, and then we'll talk to Rich Nelson and get his thoughts on where this is headed. We start with the live cattle market right now, and here we find this trade is trending, well, kind of mixed today. If you look overall, early on, but then found some strength here late. And now it's December live cattle up $1.80 at $118.55. February live cattle up $1.72 at $123.30. And Rich, we just don't have asking prices or the packer bids real well defined just yet.
I think this is one of those weeks where I'll probably have to wait till Thursday to find any actually real starting trade for us. We'll see some numbers move on the FCE tomorrow, but probably nothing that gets the non-FCE numbers too interested in seeing actual trades. Of course, we're talking about the lower show list this week, almost 20,000 head smaller than last week. We aren't seeing wholesale beef post higher prices the way we want to encourage this rally, but there's no doubt we still are seeing an undercurrent of support. Arguments that we're not going to see this resurgence in supply here are certainly be discussed. So higher prices may be seen, but no one is sure exactly what the exact price will be here.
A couple of weeks ago, Rich, we saw these weights come in at about steady levels, maybe just slightly increasing. Is that going to be a factor also to watch?
You know, that certainly will be. One thing we have seen about this weight issue is, yes, they have seasonally risen, but compared with last year, we're actually running about 2% lower than last year. That implies that these cattle feeders are relatively current, that this recent trend of lower slaughter numbers, down to the 620, 630,000 head range per week, maybe that's actually a realistic understanding of where we're at with supply. So good questions there.
Okay, let's talk about the feeder cattle market then. Look at those numbers here at about mid-session. November feeder cattle up 280, 155.52. January feeders up 327 at 154.15. March feeder cattle up 358 at 151.68. We'll go on over to the hogs and we'll check out this complex here and get Rich's ideas here. December hogs up 40 at 63.92. February hogs up 20 at 68.42. So obviously this market seems to be finding firm ground here and seeing what the next level is.
Certainly, a lot of great questions still in front of us here right now for the hog side. Obviously, we have this ending for National Pork Month procurement as being a negative issue, but right now markets hold its ground pretty well. Also, on the supply standpoint, we have this dip in supply in recent weeks, which is true. And it probably will rebound back up as we go into November. But for right now, we're still at a relatively tighter situation than a lot of these packers want to be in. So for right now, holding the ground pretty well here.
All right. That Dow Jones Industrial Average is something everybody's keeping an eye on today, Rich. 23,500 was kind of where everybody thought this was going to go. Now we're within striking distance of that. What happens then?
And that's a great question here. So this amazing outside market influence still continues, and this is certainly drawing interest away from us on the commodity side. Some will suggest that, yes, as we see the stability show up on the economy in the coming quarters, that may help us out on the commodity end. But certainly for right now, it is drawing interest away towards what's been a ravenous, exciting market there.
Rich Nelson with Allendale Incorporated. Rich, thank you very much for all the analysis and the great input here. Certainly appreciate it.